Hello, my name's Ben Wilson. I'm the ACCA's expert tutor for the AAA exam. And this topic explainer video is going to focus on money laundering. Now, a word of warning before we get into the topic explainer. Money laundering is fraud. It's a criminal offence. It's very wrong. But in this video, I'm going to be talking about examples of where money laundering has happened in the real world. I'm going to be talking about how to do money laundering successfully. That's not because I'm pro money laundering. It's because, well, it's to bring the subject to life and to make sure you really understand it so you can cope with exam questions. So I'm not pro money laundering, even though I'm going to try and make the subject interesting by telling you about how it really works. We'll start this topic explainer with a bit of a recap about money laundering. What's the factual knowledge you need about what money laundering is and how it works? And then more factual knowledge. We're going to focus on the auditor's responsibilities around money laundering because this is something that is commonly tested. Then, well, leading on to testing, how does money laundering come up in the AAA exam? That's what you're really interested in. What do I need to know about this? How does it get examined? And probably more importantly, have you got any exam tips? How can I cope with exam questions on money laundering in AAA so that I pick up enough marks to pass one of these questions? Well, we'll be covering that towards the end of the session. But before we go into the detail, I thought I'd just set the scene a little bit. Have you seen any of these TV programs? They're all fantastic. I've watched all of them, all episodes of all three of these TV programs, and I can highly recommend all of them. Do you know the thing that links them all together? You can probably work it out from the fact that I'm showing you this in a money laundering topic explainer. All of these TV shows are focused on money laundering. Breaking Bad. Well, a lot of Breaking Bad, well, if you've seen it, it's about drugs in America, producing crystal meth, and importantly, the money that you get from selling your crystal meth, how can you launder it so that you can start selling it? So start spending it. How can you make that bad money look legitimate? The Gold. This is a BBC iPlayer TV show. So if you're in the UK, you'll be able to access it, but I understand it is available internationally as well. This TV programme focuses in on the Brinksmat gold heist in the UK. It was the biggest gold robbery there's ever been in England. And a big part of the show is how do they take the money that they make from selling the gold and how do they launder it through Swiss bank accounts so that they can start spending the money, the gold money that they've stolen. It's a brilliant TV program. Lots of it is about money laundering and it's great. And the last one, Ozark. Well, Ozark, these two people on screen you can see here, well, they are money launderers. Their job is to launder the money that a Mexican crime family gets. They make their money through mainly through selling drugs, but also through other things. And these two people are finance and accountancy experts, and their job is to take the dodgy money and make it clean so that the Mexican drug cartel or crime family can spend the money that they've earned through their criminal activities. So you probably weren't expecting me to say it's a good idea for you to watch some TV for you to prepare for your money laundering section of AAA, but it really is. Yeah, Ozark particularly, watch the first episode of Ozark and it has a great explainer of money laundering. Although watch out if you're sensitive to nudity and discussion of drugs and things like that, you probably want to avoid Ozark. Maybe watch The Gold, that one's a little bit more mainstream. Anyway, on to the more standard stuff that you were probably expecting as part of this topic explainer, where we're going to do a recap of the stages of money laundering. Now, money laundering, well, what money laundering is basically is taking dirty money, money you're not supposed to have, money you've stolen, money from selling drugs or from some other criminal activity, and making it clean so that it looks legitimate and official so that you can spend it without the authorities thinking you're up to something dodgy. Because the best crime is a crime that the authorities don't realise that you've done. So how do you take your dirty money and make it clean? Well, money laundering has 3 stages. And those 3 stages, firstly, placement. Secondly, layering. And thirdly, integration. We're going to go through the three of these separately on individual slides. But you need to know what these stages are, you need to know the definitions of them, and you need to be able to spot them in exam scenarios and to be able to explain them. So the first stage of successful money laundering, placement. This is where you take your dodgy money, the cash from selling your drugs or whatever else it is that you've been doing to get that cash, and you get it into the financial system. Now, the picture that I've got on screen there is a car wash. And a car wash is a great place for you to start off with your money laundering, to place your cash into the system. Because you need, ideally, a cash business. Because the dodgy money you've got is probably cash to start off with. And the reason it's really helpful to have a cash business, what you do with your car wash to place the money into the system, is your car wash is a normal business. It runs as an ordinary operation. You might take, let's say, $1,000 a day through your car wash, through legitimately washing cars, because your cash business needs to be a legitimate business. So we take out $1,000 a day that we make from actually washing cars. But what we do to place our dirty money in alongside it is that when we pay in the day's takings, we don't pay in $1,000. We pay in $1,500. And the $500 extra is the dirty money that we are drip feeding into the system. And if we're careful about how we do it, nobody will notice. It doesn't look too ridiculous that our car wash pays in $1,500 rather than $1,000. It might look ridiculous if on certain days our car wash pays in $100,000 in one go rather than its usual $1,000. Because that way a red flag will be raised by the bank, alarm bells will ring, and they'll think something looks dodgy. But if you drip feed it in slowly and steadily alongside your legitimate takings, nobody will ever notice. Car washes are brilliant for this. Another great business is something like a nail salon where you only pay in cash, or a takeaway where you only take cash. Another one might be a casino where lots of people, you could set up. The mafia are well known in America for having helped to set up Las Vegas as a front for their money laundering activities. Because casinos take loads of cash. And you're not talking about taking $1,000 a day, you're talking about taking hundreds of thousands, if not millions of dollars a day in cash. Much easier to drip feed your dodgy money alongside such big sums. Now, that's the standard way of doing it with a cash business. But if you're more powerful, you might be able to just pay your money in at a dodgy bank. A bank that is happy to look the other way when you're paying in large cash amounts. Now, there were certain banks in Estonia that many Russian oligarchs were using for this purpose, as a way of entering their dodgy money into the European financial system. And if you watch The Gold, that TV programme that I was highlighting at the start of this, back in the 1980s in the UK, there were dodgy bank branches you could do this with as well. But we've managed to get our dodgy money into the financial system. This is stage one done. Then on to stage two. This one is called layering. And you can see the picture that I've put on screen there. It shows transactions moving all the way around the world. And what we're trying to do with layering is to move our money around. We've got it into the financial system. It's been paid into the bank, either at a dodgy bank or alongside our legitimate car wash takings. But now we're going to move it around and make it difficult for the authorities to trace. So we want to do some international transactions. I might buy shares in a company in Panama and then sell those shares in Panama and use the money to buy an investment in Dubai. And then I sell my investment in Dubai and I invest the money in Cuba. And then I sell my investment in Cuba. And then I move my money to the Cayman Islands. And then it goes to Gibraltar. And then it goes to the Isle of Man. Now, what I'm trying to do here is move it between multiple countries, multiple jurisdictions, ideally countries and jurisdictions that don't like each other, that don't talk to each other very readily. So it's very difficult for somebody who's trying to follow my transactions to actually get the authority to do so, the legal authority to do so. I want to make it as hard as possible for them to follow my tracks. So layering is really disguising. It's disguising through lots of complicated transactions across jurisdictions so that anyone trying to follow what I've done has a really hard time doing it. Then, now I feel like my money has been suitably hidden and masked by all my layering transactions. Now it's time for me to enjoy it. I need that money to get to a place where it brings some value to me. I could just draw the money out of the bank as cash, but I don't want to spend, my millions of dollars of cash. I want to invest my millions of dollars into something that I get some use out of. So I might buy a beautiful house in Chelsea, in London. That's what I'm showing here. And that's what lots of Russian oligarchs who have laundered their money have done. Or I might buy a football club, for example, which is something that other well-known money launderers have done. Or I get it into an account, a bank account, where I can just start drawing the money out and spending it. Although given, if I'm going to do all this complicated stuff, I've probably got a significant amount of money. And so withdrawing my millions of dollars as cash probably isn't that realistic. That might raise a red flag. And what I want to do all the way through my money laundering operation is get away with it. I don't want the authorities to go, oh, where did that money come from? So I probably don't get it to a bank account in the UK where I can withdraw it as banknotes. What I probably do is buy a yacht or a house or a football club or something else that gives me some utility or some value or something that I can buy on behalf of my children, for example, in their name, so it looks even less like it is linked to me. So those are the 3 stages of money laundering. Now we're going to talk about the auditor's responsibilities with money laundering. And pay attention in this bit because it could be a factual knowledge question that you're asked in the exam. So the auditors have to do certain things around money laundering. The first, whenever they're taking on a new client, they have to do proper due diligence. You might see it referred to as KYC or Know Your Client procedures. So that's knowing the identity of who you're working for. So that's passports for key directors or if it's an individual. Or it is company and corporation documents if it's a company that we're dealing with. But really knowing who we're transacting with, that's important because if the authorities require information from us, the auditor can say, yes, I did check that I knew who I was dealing with and this is who it was. The next thing we have to do when we're doing our audit, as part of our planning of that audit, is we have to assess the money laundering risks that exist for that business. Is it a cash-based company? Are they doing international transactions? And if they are, well, actually, perhaps I might not want to take on that client if I think they look like they're at high risk of money laundering. Or if I do decide I want to take on that client and do the audit work, that I plan procedures to make sure that I'm comfortable of the source of their funds so that I'm not being complicit or aware that their money laundering is going on but turning a blind eye. Next, I have to have a senior individual at the audit firm, a partner, who has specific money laundering responsibilities, who's highly trained in money laundering. So that if staff who are performing an audit think there is money laundering going on, they've got someone internally they can report it to, the MLRO. And the MLRO, if there are suspicions of money laundering at a client, the MLRO will report it to the relevant authorities. I must, as the audit firm, make sure that my staff are on the lookout for anything that smells bad. So I've mentioned a couple already. Things like lots of cash transactions, things like international transactions, things like things that perhaps aren't in the normal course of business. You know, this company is a manufacturer, but it's buying overseas property. That seems weird because they don't do any manufacturing overseas. If those transactions don't have business logic, perhaps they're money laundering. And our junior staff need to be on the lookout, on the front foot for money laundering. Now, I've put in brackets there, no tipping off. If on an audit you think that potentially there's some money laundering going on, you are not allowed to go to the client and say, oh, is there money laundering happening here? Because these transactions look a bit cash and dodgy and international and no business logic. Because the second that you let the client know that you're onto them, they start burning documents and shredding things and destroying the trail. So if you suspect money laundering, you do not go to the client and talk about it. What you do instead is you report it to someone internally at the audit firm. Can you guess who that is? Of course, it's the MLRO, the Money Laundering Reporting Officer. And then finally, it's a requirement for audit firms in the UK, but also internationally as well, that they maintain detailed records of their audits and all of the evidence they obtain during the audit for at least 5 years. The reason being that the authorities might discover money laundering was going on, maybe 2 or 3 or 4 years after the event. And by the auditor retaining their files and documents, that can be a source of evidence for the authorities to investigate. Now, how is money laundering tested in AAA? Well, I have already hinted at a few ways as we've gone through this session so far, but here it is nice and clear. There are 3 main question types you could get. The first one, unlikely but possible, but you could be asked for a factual knowledge question on money laundering. Something like, can you explain the auditor's responsibilities around preventing or detecting money laundering? Now, I've said it's unlikely because the AAA examiner likes to ask stretching questions that test your understanding rather than your factual recall. But just occasionally, every now and again, we do get a factual recall question. So it's a good idea to be ready for it. Much more likely, you get a scenario-based question. And in that scenario-based question, you might be asked something like, well, can you evaluate the risk that money laundering is going on here? And you'll be given a scenario that involves a lot of money laundering risk factors, like it's a cash-based business, like they're doing lots of international transactions, like they're doing transactions that don't have business logic, like there's a dominant individual, like the cash takings are higher than usual, all of these sort of things. Now, that could be a specific question that tells you it's a money laundering question because it says money laundering in the requirement. That comes up every now and again, but not that often. The one that is much, much more likely to come up and very regularly tested is in the risk question, in question 1 of the exam, where you're asked to evaluate business risks or risks of material misstatement or audit risks, that you are asked, well, just your normal question. Can you evaluate and prioritise the audit risks? But in the scenario, there will be some money laundering risk factors. And now these ones are harder. These sort of questions are tougher for you because nowhere in the requirement does it point at money laundering. You have to be on the front foot looking out for money laundering risk factors within the scenario. So, some exam tips then for each of these 3 types of questions. So for the first one, where it's a factual or knowledge-based question, well, my advice here, I don't think there's going to be any surprises. You've got to know your stuff. So make sure you know the 3 stages of money laundering. Make sure you know the auditor's responsibilities. And you've got to be careful that you answer the specific question that's been asked. Now, on the previous slides, I gave an example question of explain the auditor's responsibilities around preventing and detecting money laundering. But it could be that that question is phrased differently. It might just be preventing, or it might be detecting only. So you've got to make sure you read the question really carefully so that you answer the exact thing that's been asked. Then on to the scenario-based questions where you get a clear money laundering question. And it says to you, explain the money laundering risks in this scenario. Now here, It's really important that you don't write a textbook answer. You are not trying to demonstrate that you have memorized the notes. What you're trying to do instead is to use the scenario as much as possible to write points that are in the context of the scenario. And a really good way of doing that is to try to start each point with a fact from the scenario. And then I take that fact, as for example, international transactions have been taking place, and I explain how it is either layering or placement or integration. I will use the word layering, but I don't stop there, right? I don't just say this is layering. I say this is layering as it is moving the money between different jurisdictions, making it difficult for the authorities to follow. And what I've done in that explanation is show that not only did I spot that it's layering, I also know what layering is because I can explain it in the context of the fact that I've drawn out from the scenario. That's how I'd score a full mark. And, well, I've already kind of mentioned this in the explanation I just gave, but you can't just say layering, placement and integration. You have to explain it, ideally in your own words, ideally using facts from the scenario to show that you really understand what each of these three stages is. Then on to the risk questions, where you might get a business risk or a risk of material misstatement or an audit risk question that has money laundering issues in the scenario, but does not signpost money laundering directly. Here you have to be on the front foot. You have to be hunting in the scenario for money laundering indicators. And I've already mentioned what these are. You know, it's a cash business. There are lots of international transactions taking place, and there could be transactions taking place that aren't anything to do with what this business normally does. Those are the things I'm looking out for. And if I spot any of these things, I've got my, I'm on my radar now is that there's potentially money laundering going on, which I can use to add depth to a business risk or an audit risk. Now, when it comes to explaining these risks, if it is a business risk, then I need to be explaining the potential impact on the company. And the impact on the company could be that I'm investigated by the authorities who shut me down, or that investigation creates negative publicity and it puts off potential customers. What is the impact on the company if it's a business risk? Or if the question is asking me about audit risks or risks of material misstatement, then I'm bringing it back to a number in the financial statements that could be wrong because of this money laundering issue. So if they're a cash business and they're drip feeding extra cash into the company to disguise dodgy funds, then it would be that perhaps revenue is overstated. So I would like to thank you for your attention in this session. I hope you found it useful and you have a better understanding of what money laundering is and how to deal with a money laundering question if it comes up in your exam.